Here we are, Capitol Intel at the House with Congressman Jim Himes from Connecticut, a member of the Financial Services Committee. We had an important hearing now on legislation that will be part of the Jobs Act, which is getting money for small businesses, emerging growth companies, and allowing, pre-private, pre-IPO placements, allowing small businesses to go on the market. Congressman Himes, what is your viewpoint on this, and how can we get this, basically, this well-kept secret out to the market?
Yeah. Well, first, just to be clear, I'll answer that question, but I'm not going to tell you where Sarah Connor is.
Okay.
So, look, the Jobs Act on balance, I think, was a good step. I had my concerns with it. I supported it, but I had my concerns. I've always felt that the definition of an emerging growth company was a little bit broad. Obviously, there's going to be questions around things like crowdfunding that are going to have to be worked out very carefully by the SEC. Some of the panelists today sort of accused the SEC of moving way too slowly. I think it's better that we get investor protection right than that we necessarily get it done quickly. So the phase we're in right now, I think, is the regulators doing, I think, good and important work to make sure that we make crowdfunding available, but we do it in ways that, retail investors don't lose their nest egg, that we allow emerging growth companies to seek the, capital in the public markets, but we don't do it in a way that reduces the amount of information out there, and therefore the confidence of investors. So, look, I think, this is a question that gets answered probably first when the SEC finishes their rulemaking process, and second, once we've actually had a chance to see how markets respond. There will be bad stories, there will be good stories. We just need to make sure that the good stories weigh the bad ones.
I mean, we have this market, which is why we have all this liquidity. We have $19 billion for WhatsApp, but among people who are really desperate for capital, like African American businesses and entrepreneurial, the typical venture capitalist incubators, sort of that door's shut, but the traditional bank lending of going to your bank and having a bank manager and maybe getting investment from friends and family and other things, the more traditional old form is better suited for these businesses than, let's say, the social media business, which has no problem getting capital.
Well, I don't think that's true. Look, I think everybody who's looking for capital, regardless if it's the restaurant down the street or the guy who's got an idea for another Facebook, all of those businesses face a challenge getting capital. Capital is scarce. People want a good return on their investment, and so it's always going to be a challenge for any business to raise capital, and that's a good thing. They should have to make their case to the investors on how those investors will get their money back. And I'm not sure that the particular modes discriminate against one group of businesses. Look, local restaurants are not going to get funded by venture capital, right? They're not probably going to get funded by your local bank. They're going to get funded, by families and partners pulling their money together to get started. And then when that business grows, then all of a sudden the financing alternatives expand.
But we had, like last year, $40 billion was given to the major banks, investment banks, JP Morgan, Goldman Sachs, for lending to small businesses. We're seeing the same investment in Goldman Sachs and JP Morgan buy residential real estate. This is not exactly what this money was used. And the hedge funds love this Jobs Act because now they're selling and soliciting to the general public for clients. I mean,
well,
this was
but
Citadel was
not to the general public, right? Private investing still has to be targeted at accredited and institutional investors. So you're I think, conflating some things there. But look, if you ask me the question, are the big banks in particular doing enough lending to our small businesses? I do not think so. And it's a source of irritation for me because, of course, those large banks survived because the United States taxpayer put an awful lot of money on the table for them. And so I would love to see them doing a lot more lending into our communities than purchasing securities and other things to make money on their balance sheets.
Thank you, sir.
Okay, take care.
No, but that's